Hi, everybody. Welcome to the Parallel Systems broadcast. I'm your host, Mike, and thank you so much for joining me for tonight's episode where we're going to be looking at one of your favorite topics. This is one of the topics that always gets me at least 5 views, and it's a topic that is close to my heart too. It's one that we discuss quite often, although I rarely give my true opinion because people just ain't ready for it. People don't want to hear it. They don't want to hear how good life can be. But I'm going to give you it tonight. We're going to be talking about gold price predictions. Yes, my friends, gold price predictions for 2030. Now you might be saying, hold up, Mike, 2030? That's a long, long way away. And that's only because you've lived 4 years in which we've had everything thrown at us. We've had the crazy, crazy pandemic. And then we had all of the war and the speaking of nuclear war. And then we had Donald Trump's ear deflecting bullets. Pow, pow, pow. It's getting crazy out there. And I don't know what's going on. And I don't think you know what's going on. We're just sat here watching it like it's a Hollywood film, because it probably is. But putting all that to one side, let's put the popcorn down and let's just imagine that 2030 arrives and we're staring into a screen, or we've got our VR goggles on and we're checking the gold price, and what does it say? Well, we're going to begin by looking at predictions that were made in 2020 in the In Gold We Trust report, which is a favorite of ours over here on the Parallel Systems broadcast. So we're going to begin by looking at what they said they think the gold price will be in 2030, and this was a prediction made in 2020. We're going to see how that's holding up, and then we're going to go back and look historically at what gold averaged decade by decade from 1970 to 1980, 1980 to 1990, all the way up until present day. And we're going to project that onto the gold price beginning 2020. So I'm going to imagine if we have a repeat of each one of these decades, what would the gold price be in 2030? And I think that's a pretty good way of doing this. It's a historical look. But then my friends, we're going to imagine what the future might look like if there's a currency reset, because I think that's what's going to happen. I'm one of those strange people that actually think something different will happen this time. It's going to be a reset, and I don't think they're going to be able to keep the dollar in its current format. Maybe we have some digital dog crap dollar that you need to scan your retina to use. I don't know, but I don't think you're going to be using the dollars in your pocket. Those paper ones, I don't think so. I think we're going to have some kind of reset, a debt default, and maybe a restructuring under a new crypto digital currency that's going to be ushered in by the likes of Larry Fink, Michael Saylor, Donald Trump, JD Vance, Kamala Cho, all of them. They're all going to be ushering in the digital surveillance infrastructure because that's their job. That's what they are paid to do. They ain't paid to save the world, my friends. That is a fact. So that's what we're going to be seeing in the next few years. Whoever gets in power, we're going to see more and more of this digital infrastructure applied to our financial lives, and it's going to surveil you, it's going to track you, it's going to control you if you let it. And of course, at some point, the switch will be flipped and the old system will say, bye-bye, it's gone. And you're going to be in this new system, and it's not going to be pretty. But before we get to that, let's imagine that the old system does survive. What would the gold price be in 2030? And even if it doesn't survive, we can also imagine what the value of gold will be in terms of what it would purchase you in terms of today's money. And I think that's the key part of this one. So reset or no reset, it doesn't actually matter. Let's go to our chart from the In Gold We Trust report to see what they said back in 2020. Okay, so I've got the chart in front of me, and as you can see, it's titled Approximated Gold Price in 2030 by Distribution Probability. Now, I'm not going to go into how they came up with this distribution curve. They went through a load of different metrics, but ultimately this is what they came out with. And as you can see, the most likely gold price, according to the In Gold We Trust report in 2020, was between $3,000 and $4,000 or $4,000 and $5,000. So let's say there was a range there. The most likely was between $4,000 and $5,000, but it was just above the previous one, which was 18.1% for $3,000 and $4,000. So essentially, let's say right down the middle, it was going to be around $4,821. That's what they said the probability weighted peak was in US dollars, which is really interesting because it is basically double where we are today. We're currently at around $2,550. So it's just under 2 times where we are today over the next 6 years. Now, I wonder if they still have this prediction or if they've increased it since this time. I'd imagine they would have, because back in the year 2000, gold was actually at $1,520 per ounce going into the decade. So now let's go back and look historically at what gold did from decade to decade to decade to see what the 10-year returns were And then we'll apply that to where gold was in 2020 to try and imagine what the gold price could do over the next 10 years if we see similar market conditions to each of these other decades. And I'll give my take as to which one we are most likely to see in the coming few years, or where we actually are right now, in my opinion. Okay, so the first chart that I wanted to show you is this one. It's the gold price in dollars from 1970 to 1980. This is the first decade that we're going to look at. But before we talk about this explosive decade for gold, an explosive decade on all fronts, we should say. We had the Yom Kippur War. We had gold prices spiking because OPEC were not happy with the Israelis. We also had commodity prices in general spiking. We had very low to no growth across the Western world and globally in general. We also had massive inflation, which led to stagflation. So it was a bit of a shit show. Wasn't a great decade for anyone, but there you go. That's what it was. And I would say that actually, looking around right now, we're seeing a lot of parallels, but we'll come back to that one later. Let's look at the chart and see what gold did over that decade. You can see that going into the decade, gold was at $41 per ounce, and it ended the decade at $512 per ounce, which was a spectacular gain for 10 years. It was actually 1,148.78%. 1,148.78% for the decade. But before we get into how that happened, let's just remind ourselves what was happening the decade prior. Now, the reason I left out 1960 to 1970 is because this is when gold was actually at a fixed dollar price. It was $35 per ounce, and it had been fixed at that price ever since the Bretton Woods Agreement following World War II. So the US said, we'll fix the dollar to gold by having a set price for gold at $35 per ounce. Then all of you guys can take our lovely, fantastic, beautiful dollars and it's as good as gold. And if you ever are worried about the integrity of those great squeaky clean dollars, well, you can just bring them back to the Federal Reserve. Give us 35 of them and we'll give you a fantastic shiny 1 ounce gold coin. Now that was the arrangement and it was working fantastic until the US basically defaulted on it because they were printing too many of those dollars. And of course, they were doing that to fund their many wars, their many excursions in different countries, the Korean War, the Vietnam War, where they went to get all of those magical poppies. That's what it was all about, my friends. Let's not kid ourselves. And then what happened after that was basically other nations said, screw this, they're debasing the dollar, they're not keeping to their promise and being fiscally responsible. And there's no way they're backing the dollars by gold anymore, so we'll just take our dollars, thank you very much. $35 per ounce, you say? Okay, give me the gold. And of course, this led to a run on the US's gold supply, and they didn't have enough gold to cover all of those dollars that they'd printed, so they reneged on the promise. Now, as we got to the end of the decade, basically they were spending a lot of time trying to manipulate the price of gold down using the London Gold Pool. Now, I've gone into this many times before, so I'm not going to talk about it here. But essentially, there was a cartel of different nations all working for the US, including Great Britain, Italy, France, and they were told that they must sell gold in the open market to keep the price down, or if the gold price fell too far, they'd buy it again. But it was mainly to keep it down, of course, because of what was happening with the currency debasement. And this is why gold actually broke from its peg of $35 per ounce going into 1970. So it actually started 1970 at $41 per ounce, not $35 per ounce. That is why. And like I said, over the course of the decade, it rose to $512 per ounce in 1979 at the end of the year. But the high in gold actually came just 1 month later in 1980. So I could have included that in the data, but I didn't. I wanted to keep it accurate. But if we add just 1 month to this data, from 1970 to 1980, the gold price actually hit $843 per ounce in January 1980. So if I did include the extra month, the gold returns over the decade would have actually been 1,500%, not 1,148%. But I don't want to skew the data. I don't want to cook the books. I'm not the US Treasury. I'm not the British Bureau of Statistics. No, I'm not going to cook the books. I'm going to give you the official one. But we will come back to that in a little bit because I want to talk about the inflation adjusted gold price. Now let's move on to further decades. So let's go to 1980 to 1990. Between 1980 and 1990, gold actually averaged just a pathetic, measly 19.87%. So this was a terrible decade for gold. And of course, this was coming off the back of a period of massive inflation, and Paul Volcker took interest rates, Fed funds rate, right up to around 20% towards the end of the 1970s going into 1980. Now, this led to a lot of people cycling out of gold and into US treasuries. And if you bought some of those long dated treasuries back in 1980, having just seen gold go up 1,500%, it was the trade of a lifetime. You could have retired, you could have gotten yourself a Barbie wife, gone to the beach and died young. Live fast, die young. But if you didn't do that, then you had to suffer. If you didn't do it and you kept your gold, you had to suffer a measly 19% between 1980 and 1990. Now, of course, this was during the years of hyper-financialization when the Ponzi scheme, the derivatives complex was expanding year in, year out, and nobody cared about real money. Nobody cared about gold because the casino was in full swing. So it was a terrible decade for gold. It was a great decade for the Ponzi assets. Of course, we had the Japanese markets on fire. That's when we had the Nikkei go to its blow-off top towards the end of that decade. And the gold price collapsed. It collapsed all the way down from its high of $850 per ounce to around $300 per ounce in 1984. Now, gold did start to climb a little bit after that, and we saw the gold price go up to around almost $500 per ounce in 1987, but then it continued to decline again going into the next decade. So it was two bad decades for gold in truth. And between 1990 and the year 2000, gold only increased by 29.26%. So 19.87% between 1980 and 1990, 29.26% between 1990 and 2000. But then we had gold, of course, break out again on another massive bull run. So really, my friends, the trade was this. In 1970, put everything into gold. Your life savings, your grandma's life savings, sell your house, sell everything, sell your kids, put it all into gold, and then sell it all in January 1980. Buy yourself a load of long-dated US treasuries, 20-year US treasuries, get some of them. Now you're going to be rich. You're going to get yourself a Barbie wife. You'll buy back the kids. You'll put some flowers on grandma's beautiful monument that you built for her. And also, now what you're going to do is you're going to buy yourself some of the Japanese Nikkei index, and you're going to ride that sucker up until 1989. But then you're going to get out. You're going to jump out really fast, sell it all. And now you've got just about enough money to pay for your massive divorce bill. So you've done a great trade there, my friend. But now you want to be going back into gold because from the year 2000 until 2010, gold did a staggering 274.71%. So not quite the 1,148% of the 1970s, but the 2000s were pretty damn good. 274.71% for the decade. And of course, this was when the stock markets died. I did a video on this before. I showed you that if you value the stock market in gold, then essentially all of the stock markets of the West, the S&P 500, the FTSE 100, the Euro 50, all of them died with the dot-com crash, and they've never recovered, and gold has outperformed the stock market. In fact, it's been the best performing asset class for the last 30 years. And that's because now the only way they can keep people at the casino, the only way they can keep this all going, these massive debt pyramids, is to destroy the currency, to keep printing more and more debt and forcing that into the system. And the way they're doing that is by debasing the currencies. So the stock markets that are valued in these currencies are going up nominally, but in terms of real value, they are collapsing compared to gold. And if you value them in gold, you see that. And of course, that's why the price of gold has continued to rise. Now, between 2010 and 2020, gold actually didn't have a fantastic decade. It went up on average only 4% per year, making 40% for the decade. And that's something that we can learn from these charts and looking back at the history of gold, that it doesn't move in a straight line. It moves in fits and bursts. So you'll have periods where gold is very quiet. It's like an ultramarathon runner, and then all of a sudden it becomes a sprinter. And if you look at the average returns in gold in the US dollar from 1971 all the way until today, it's actually 10.6%. So it's outperformed the stock market. In the euro, it's 10%. In the great shitty pound, it's 11.6%. The Australian dollar, 11.6%. In the Japanese yen, it's 9.3%. But if you go back over the last few years, just look at this. 2024 year to date, 26.1%. 2023, 27.4%. And this is the same across the board. You can see this across all of the fiat currencies. gold is now breaking out to all-time highs and the rate of change is increasing, similar to what it did towards the start of the 1970s. So that's very instructive too. Now let's move over to this chart here that I made for you all. It showed you the returns decade by decade, which I've just laid out to you. And then I took the gold price in January 2020, which was $1,520 per ounce, and I overlaid the percentage gains for each decade on that price. So this gives us the price of gold in 2030 if gold repeated the decade increases that I've just gone through. So as you can see, between 1970 and 1980, we had that massive 1,148.78%. Well, if we have a decade like 1970 and gold does the same thing, it would lead to a gold price of around $19,000 per ounce, $18,969. So that would be pretty nice. That'd be pretty good, wouldn't it? Well, let's go to the next one. If we repeat 1980 to 1990, it's $1,822 per ounce. I don't think so. I don't think that's going to happen. But if it does, I'm pretty sure it will get bought up pretty quickly. Then we've got 1990 to 2000. That would lead to a gold price of $1,964 per ounce. Now, here's an interesting one. This is 2000 to 2010. Which would be $5,695 per ounce, which is actually kind of where they was in the Ingold We Trust report in 2020. So if we saw a repeat of 2000 to 2010, we would actually get to about that prediction by the Ingold We Trust report. Then, of course, we've got the next one, which was a bad decade for gold, only 40%. That would lead to a gold price of $2,128 per ounce. Now, where we are right now with the gold price at around $2,550 per ounce, we've already surpassed the 1980 to 1990, 1990 to 2000, and 2010 to 2020 gold price predictions based on past decade returns. So we've already actually beat all of them. Now, I think they're all off the table personally. I don't think we're going to see gold around $2,000 per ounce in 2030. I think that's an insane prediction to have because quite simply, the paradigm has shifted, my friends. We're going into a financial reset, or in the very least, a financial catastrophe, the likes of which we have never seen in our lifetimes. And I think it would even make the Great Depression pale in comparison. Why is that? Well, quite simply, if you go back to where we was in 1970, global debt was minuscule compared to where we are today. The US's debt to GDP level in 1970 was only 35%. It was only 35%. Today, it is at a staggering 123%. And if we look at it in terms of billions of dollars or trillions of dollars, back in 1970, the US debt was around 330 billion. 330 billion with a tiny little b. Today, Jerome Powell farts 330 billion. It's nothing. We're in the trillions. We're at 35 trillion. We're going to be expanding that massively under the next president. Whoever gets in power, if anyone does get in power, maybe they put an alien in there. I don't know. Maybe the invasion happens. Maybe Donald Trump here beams in the aliens and we have an alien president. That could actually happen. Who knows? We're living in crazy times. But I can guarantee you one thing. Those aliens are going to pump up that debt as well up until the point the system gets reset. So my point in all of this is we're in a far worse fiscal situation than we was back in 1970. And we have had a similar decade leading up to this one in which the gold price has been heavily manipulated in the paper markets, just like it was between 1960 and 1970. So we've had that beach ball held underwater for a long time. And it's just getting to the point now where it's being released. So we're starting to see the gold price take off again because they're losing control of it. So let's just consider if any of those predictions that I just laid out are even possible. The 1970 to 1980, 1,148% price increase, is that possible? Is that even feasible? Could we see gold hit $18,969 per ounce at the end of the decade? Well, that's actually kind of a moot point because we have already hit that price level. Yes, you heard me right, my friends. We have already been above $18,000 per ounce, inflation adjusted, because if we go back to when gold hit $843 per ounce in January 1980, Inflation adjusted using the real statistics, it was over $18,900 per ounce. Now, this doesn't show up if we look at the CPI inflation adjusted price of gold from 1980, because of course they cooked the books on the CPI index. It's kind of worthless. So if we look at the CPI inflation adjusted price of that $843 per ounce in 1980, it would only translate to a gold price of $3,045 per ounce today. But if we look at the real true inflation numbers using shadow stats and apply that to the $843 per ounce in 1980, that would equate to a gold price today of around $24,000 per ounce. So if you had 1 ounce of gold in 1980, today that 1 ounce of gold would represent a gold price of $24,000 per ounce of gold. So do I think that we could see a gold price around $20,000 in 2030? Or, as we should say, do I think that gold could buy you $20,000 worth of stuff in today's money? Because remember, they may reset the currencies, they may reset them all against something digital. We just don't know. But I absolutely think that gold could buy us 5, 6, 7 times more stuff than it does today, because all that has to happen is the asset prices have to deflate and gold has to get revalued, either because they want to account for all of the money that they've created, or they can reset that and gold will get revalued because now it becomes a reserve asset and everything has to be valued in gold once more, which is essentially what the BRICS nations are already setting up for. That's why China has 40,000 tons of gold sitting there. That's why other nations are doing the same. Because of course, as this system starts to fall apart, there will be massive deflation in asset prices. It could happen when the system collapses, or it can happen en route to it, and then again when the system collapses. I've always said gold gets revalued twice. Once on the way to the end of the current system, and then again after the current system ends. What we're seeing right now is the revalue of gold on the way to the end of the current system. So it's going to get revalued continuously up until the point they have to reset the system. Then it will get revalued again officially. I think there'll be some kind of international agreement. It doesn't mean that your currencies are going to be backed by gold. No, they've got some crypto dog crap for you, my friend. The gold's going to be in their vaults. But I do think there's going to be a revaluation of gold, and we've got some wild times ahead in that respect. Now, let's talk a little bit about silver. I do have the silver chart too, because remember, silver hit $50 per ounce in 1980 also, which was an all-time high inflation adjusted for silver. It's never been higher. And if we do the shadow stats calculation on that, it leads to a silver price over $1,000 per ounce. So the silver price being at $50 in 1980 equates to a silver price today of around $1,000 per ounce. Now, do I think that silver is going to go to that level and remain permanently at a higher plateau where it's 5, 6, 10 times more valuable than it is today? Absolutely, I think that could happen, but it would happen for a different reason, because silver is not going to be put back into the monetary system. There is nobody nowhere setting up for that besides the preppers who are going to be using it in their small off-grid communities. But I don't think any central banks are going to do that, and that is certainly not where they're heading. But it is an extremely important industrial metal. It's so valuable, it's so useful, it can be used in so many different things, from medicines, from bandages, for cleaning wounds. It can be used in photography, it can be used in electric vehicles, it can be used in photovoltaics. It's going to be such an important metal, particularly if they want to go to this super smart city techno surveillance grid. They're going to need a lot of silver, and there's not enough of it out there. So the silver price will get revalued because of that. And I think there'll be lots and lots of supply squeezes on silver. But it's not going to be a monetary metal, so it's important to understand those dynamics. They are different across both metals. Of course, we should also mention that using the dollar price to have these discussions is kind of a bad idea. Because, of course, if they are inflating the currencies, what does $10,000 in 2030 or $100,000 in 2030 actually buy you? That's why I like to say, what will gold buy me in today's money? So how much more stuff will it get me? So I usually say, I think it's probably going to buy us between 5 and 7 times the amount of stuff that it does today. And the dollar price of that, well, who knows? Because like I said, the system's probably not going to be here in the same format by that point. In fact, I think going into 2030 is when we will have the reset. What we'll have between now and then is the system falling apart gradually, suddenly. and then it's just going to get to a chaotic period. And that is why we're seeing all of this social disorder. But I think I'm going to leave it there for tonight's episode. There's so much more I could have got into, I would have got into, but I think we've said enough. So let me know in the comment section, guys, what you think gold and silver will be in 2030. And do you think it will buy you more stuff, or will it just retain your purchasing power? I think because of all of the macro forces in play, it will buy us more stuff. But I'd love to hear your thoughts too. Also, please check out the Patreon. I'm going to be doing an article on this very subject. I've also got quite a few very interesting speculative newsletters that I've been putting out recently talking about Trump and RFK and the synthesis of these two characters. Also, rate cuts incoming. How do I think that's going to affect gold and the dollar? And I've got many other ones to do with the big picture narratives that are in play, including the Civil War one. All of them very interesting, all of them worth the listen. So please check out the Patreon if you'd like to support my content and also get some of my work that will help you to protect and increase your wealth. In closing, take care of yourselves. I hope you're all well, healthy and happy. And I look forward to seeing you all in the next one.